The Israel-Hamas war is having widespread effects on global trading, especially in the Red Sea. Over the last few months, commercial ships that use the Red Sea trade route have been attacked by Houthi rebels. The attacks are disrupting multiple industries who rely on just-in-time manufacturing. So what industries are the most vulnerable, and how will it impact consumers? Let's go ahead and bring in Dr. Jason Miller, professor in supply chain management at the Broad College of Business at MSU. Thanks for being with us this evening.
Thanks for having me on.
So I want to, first I want to assume that a lot of people don't know about this. I think that's a fair assumption. So can you break it down for us in layman's terms, how detrimental these disruptions are to the Red Sea route and why people should care?
Yeah, so the reason this matters so much is a good percentage of U.S. imports, and essentially all the imports from Asia to Europe, flow through the Red Sea and the Suez Canal. What's happened is that route is effectively blocked right now due to these attacks. And what this is doing is it's forcing ships to route around the Cape of Good Hope around Africa. And that may not seem like much, but it's adding 30% extra distance to journeys. And essentially that's like a 30% increase in demand over on a short-term basis. And this is driving up the cost for shipping by water as well as air.
You talked about these large ships having to reroute. What industries are the ones most vulnerable to these disruptions? What are we seeing impacted the most?
Yeah, so when we look at U.S. imports from South Asia, so India, Pakistan as an example, pharmaceuticals, apparel products, motor vehicle products really stand out as some of the most affected industries.
In a few of your LinkedIn posts we saw, you've said that these interruptions don't pose a significant inflation threat for American consumers. I think that's where most people's minds go to first. How is this going to impact me, impact my bank account? Can you explain to us why you're not so concerned in that regard?
Yeah, so the big reason is even though we have this perception that we don't make anything in the United States anymore, the vast majority of how we spend our money is spent on goods and services produced in the United States. So only about 11% of US spending can be traced to imports, and much of that is actually Canadian crude oil that we bring in and refine. And so when you factor in that only 11% of our spending goes to imports, and then only about 5% of the cost of imports, that total cost we pay, is actually transportation. You do the math, and then this is effectively a blip on the inflation radar. You also combine that with the fact that we have a tremendous amount of new container ship capacity that's coming online this year. And consulting outfits like Drury in the United Kingdom put out a report today saying they don't see this really moving the needle on the balance of supply and demand in that sector this year.
Are there any long-term effects these interruptions will have on consumers outside of those inflation concerns?
So right now you could have intermittent stockouts because everybody's having to adjust the amount of safety inventory they need. Previously, you may have been planning on 26 days from, India to US East Coast. Now you're looking at, let's say, 40 days. So you may have some products that run out because it's a longer transit time than we previously expected. But what we've already seen is essentially all the container operators moving to routing around Africa. So all it'll take is another month or so till we kind of get this sort of settled in. And then it will be sort of, kind of back to the way it was before this disruption occurred.
I'm looking at this video that's been on our screen as you were speaking here, and I'm curious if you have any thoughts on this. Do you think less people will want to be on board these ships? I mean, with this conflict, with the risk, the safety associated with it, could you also see people a little bit more hesitant to take these loads, to be responsible for the transfer?
So this won't really affect, the demand for, let's say, maritime personnel, and it certainly is not going to affect the container operators' willingness to take freight. Since 2022, that sector has been in a fairly deep recession, and so we were actually entering this year expecting prices to fall even more. So this has changed that equation, but at the end of the day, this is not going to really alter the nature of global trade in any way.
Any workarounds or solutions to this issue? I mean, Are you comforted by the amount that politicians are talking about this right now, or would you like to see more?
No, so I think, in terms of workarounds, what we're already seeing, for example, is more air freight out of South Asia to the United States and to Europe. So for some of those pharmaceuticals and apparel products that are more expensive, it makes sense to do that modal shift. It is, I think, good the general awareness the U.S. public has for supply chain related disruptions today versus 6 years ago. People didn't think about these things very much, and I think they now appreciate how really interconnected the global economy is.
It certainly is. We're optimistic about your thoughts on inflation, and now people reminded to be a little bit more patient when it comes to supply. Dr. Jason Miller, a professor in supply chain management at the Broad College of Business at MSU. Thank you so much for your time this evening. We appreciate it.
Yep. Thank you. Take care.